Hello everyone, good morning and welcome to today's lecture. So today what we are going to do is we are going to cover some questions with respect to the essays that you have already seen till now, and then we'll start the 500 series. And meanwhile, I'll be discussing the questions. I'll be, if you have any doubts with respect to any of the essay that has been covered till now, I'll be happy to answer on that. Okay, so let's start. I have some questions. Let's discuss those ones. And if you have doubts, you can ask them. Okay. So first, like I have bifurcated based on the essays. Okay. The first one, it's on essay 210. Now, what is the question over here? And these questions might be, they are some link to the ones those are like asked in the exams, or they, are important to understand with respect to the concept, and they are very crucial. So I have covered those areas also. Okay. So in order to establish whether the preconditions for an audit are present, the auditor shall determine whether the financial reporting framework to be applied in the preparation of the financial statement is acceptable. Outline some factors that are relevant to auditor's determination of the acceptability of the financial reporting framework to be applied in preparation of financial statement. Okay. Now, what is the question basically here is, we are required to provide some factors, okay, that help us to understand whether the financial reporting framework that is required to be applied is acceptable or not. Okay. So the question here is that whether the financial reporting framework that has been applied or that is required, that will be applying, is acceptable or not. Now, this comes with respect to, like as a part of the precondition of the audit. So because what is the precondition of the audit in SA 210? That the management should use an acceptable financial reporting framework. Okay, so that's a precondition. Now for that precondition, how do we identify that, okay, this particular financial reporting framework is acceptable? Like tomorrow management says, no, I'm a listed company and please follow accounting standards. Accounting standards for financial reporting framework. They are listed company and management says, no, prepare horizontal balance sheets, not the vertical one. So what are the factors that will help you to understand whether a particular financial reporting framework that has been, applied by the management is appropriate or not? Very crucial. Okay. So here we are required to discuss certain factors with respect to that area. Now, basically, the factors that are relevant and that are crucial to understand with respect to the financial reporting framework, okay, are like the nature of the entity, basically, what type of entity it is, okay. For example, it's as I said, listed entity, non-listed entity, or private limited entity, LLP, sole proprietorship, what type of entity it is. Second, the purpose of the financial statement, consolidated financial statement, interim financial statement, whether it's a like annual financial statement, what type of financial statement is the purpose. Okay. Then again, when I talk about the purpose, it's whether they are prepared to meet the common financial information, they have a specific information inside them, like what is under the underlying thing of those financial statement. Okay. Now it may happen that it's the financial statement of a government company or a government organization. So the purpose of the financial statement, what is the purpose of that particular financial statement. Then the nature and the nature of the financial statement, basically, as I said, okay, complete set of financial statement, single financial statement, balance sheet, P&L, revenue account, receipt payment account, whatever it is. So what is the nature of the financial statement? Then what laws and regulations prescribe the applicable financial reporting framework? for a company, it's an electricity company, the different financial reporting framework. Bank, there is a difference. NBFC, there are certain different requirements. So each and every type of entity may have a different type of requirement with respect to the financial reporting framework. So what laws and regulations are there which prescribe the applicable financial reporting framework? So these are certain factors which are relevant with respect to identifying whether a particular financial reporting framework is acceptable or not. Any doubt? Any doubt? Now, along with that, I want to highlight one more area, where there is an financial reporting standards where the law provides, okay, there is some additional financial reporting requirement, like we saw in the SEBI LODR, or we saw for the NBFC. So there is some additional requirement by the law itself. Okay, then the auditor is required to identify such areas where there is an additional requirement, and the additional requirement prescribed by the laws, or even there is a conflict between financial reporting standards and the laws and regulations. Okay, then he needs to understand at that particular point in time whether these additional requirements can be met through the additional disclosures. Okay, can I satisfy both things, financial reporting standards and laws and regulations? Usually there are very, very, very less and minimal cases where you will find the conflict. But in case there is one you have identified or you have came across, then understand that whether the additional requirement can be met through the additional disclosures, number one. Number two, the description of the financial reporting framework, okay, can be amended accordingly to meet the requirements of laws and regulations. Okay, if neither of them possible, then the auditor needs to consider the impact of that particular, you can say deviation, particular issue with on its opinion. Clear? Any doubt? Okay. Can anyone give me, I have given the examples during this only. I just want to understand, can anyone provide some examples of financial reporting framework that they know? What could be, part of the financial reporting framework? I've given a good examples during this understanding. Some examples with respect to the financial reporting framework. Come on, pretty easy. Okay, as we discussed some examples, like it's a schedule 3, or it's electricity company, so the financial statement prescribed for the electricity company. If it's the bank, then financial statement framework prescribed for the banks that we have seen. Some additional requirement in case of SEBI for listed entities, or for NBFCs by the RBI. All those things, Ind AS, AS, all these things fall under the financial reporting framework. Okay. Okay. Good. Now, second question. The agreed terms of the audit engagement shall be recorded in an audit engagement letter and other suitable form of written agreement. List down the factors that may influence a decision whether to send a separate audit engagement letter to the component auditor. Now, you need to provide some factors with respect to like whether a separate engagement letter is required to be sent to the component auditor or it is not required. So what factors decide this particular thing? So if I ask you, okay, this is a particular component auditor, okay, now you have a principal engagement letter signed by the principal auditor, principal, the partner who is there for the entity. Now, which are the factors that will influence the decision making whether to send a separate engagement letter to the component auditor? Come on, guys, pretty easy. Okay, so now with respect to the component auditor, okay, we need to understand what are the things that are essential with respect to the component auditor. Now, first of all, you need to understand before deciding, whether a separate audit engagement letter is required to the component auditor or not. You need to understand who is appointing the particular component. Okay, who is appointing that particular component? Whether the entity is appointing or whether the principal auditor is appointing. Number two, whether a separate audit report is required to be issued by the component auditor, or it's just a group reporting internal memo will be shared with the component with the principal auditor, and that will do. Number three, legal requirement in relation to the appointments of auditor. Is there any legal requirement, or what are the legal laws that require for the appointment of the component auditor? What are their laws and regulations with respect to that? Then degree of ownership by parent, like how much ownership it's there for the parent entity in the component particularly. Okay, then comes the degree of independence of the component management from the parent entity. Again, like how much influence the parent hold over the component. So all these are the areas which defines whether a separate engagement letter is required to be shared for the component auditor or not. And very crucial reason, because in times of the group reporting assignments where only component auditor are required to report to the parent auditor, then whether agreement between the parent entity component entity and the component auditor is required, or just instructions from the group auditor is shared with the parent component auditor. So this is how we need to understand, based on all these things, whether a separate engagement letter is required for the component or not. So these are the 5 points: who appoints the auditor, whether a separate audit report is required to be issued, legal requirements, degree of ownership by parent, and degree of independence of the component management. Any doubt? Any doubt with respect to the engagement letter for the component auditor? Okay. See, generally, it depends upon case to case basis. What are the underlying conditions for the component auditor based on these parameters? These conditions that will take a decision whether a separate engagement letter is required or not. Okay. Any doubt? Any doubt with respect to this one? Okay. If no further doubts, then we can proceed further for the next question. Okay. DA Incorporation, a company based in the US, has been subsidiary in India named AAPL. The company has been involved in the manufacturing of auto spare parts for the last 10 years. Messrs. AP and Company were appointed as statutory auditor for the financial year 21-22 of AAPL. Okay. Then Miss P, the firm's partner, decided to form a team of 10 employees consisting of 4 article assistants, 3 executive, 1 manager, 1 partner, and 1 engagement quality control reviewer. After deciding all the terms of the engagement, Miss P started the audit. Miss P appointed Mr. Z, an engagement quality control reviewer who was recently qualified graduate from a prominent B school in India. During the financial year 2022, financial year 21-22, the engagement partner assessed that there would be need to appoint an expert for the valuation of the machinery and fixed asset. Engagement partner informed the engagement manager to hire Mr. K as an expert. The engagement manager decided not to consult with Mr. K and proceed the ordinary audit course. At the time of finalization and signing of the audit report, engagement partner did not review the working paper regarding the consultation with Mr. K and trusted in the good faith upon the engagement manager that he must have consulted and incorporated the consultation in the audit report. However, engagement manager forgot to inform the engagement partner about the consulting with Mr. K. Also, Mr. Z, while performing his review, was not able to identify this issue. Now, these are the options. You need to select one option. What is the appropriate option or answer here? Ms. P should have reviewed the working paper regarding the consultation with Mr. K, as it is the engagement partner's responsibility to ensure that the appropriate consultation have been sought under the challenging matters. Ms. P is not guilty of the negligence as she should have trusted in good faith upon the engagement manager. The engagement manager is responsible for not informing his partner. Also, engagement quality control reviewer is equally responsible as he could have identified the said issue in his review. Ms. P should have reviewed the working paper regarding the consultation with Mr. K, as it is engagement partner's responsibility to ensure that the appropriate consultation have been sought under the challenging matters. Also, Ms. P should appoint a relevant person and a member of institute as an engagement quality control reviewer. So what is the correct answer over here? What is the correct option over here, guys? Okay. whose responsibility it is when it comes to the direction, when it comes to the review. Who is responsible for conducting the reviews? As per the firm's policies, review policies and procedures. Or who is responsible basically, to perform a thorough review of the audit documentation and discussion with the engagement team, that the appropriate audit evidence has been obtained to support the conclusion, and that has been reached in my audit report till the date of the reviews. Come on guys, pretty easy. Okay, so see, SA 220, okay, that's a very, very important essay, very important, trust me. Reason because SA 220 talks about my quality control for an audit of financial statement. And when I talk about quality control, it's lay down the responsibility. If you read the essay, if you read the plain essay, if you see the objectives, the objective says that the auditor is required to implement quality control procedure at the engagement level that provide the auditor with the reasonable assurance that the audit complies with the professional standards, regulatory and legal requirements, and the audit report that has been issued is issued in the appropriate circumstances. Means that they should have complied with the policies and the procedure of the quality control. Okay, very important. And when I talk about quality control, it's not only about the quality of audit documentation. There are few things involved. Okay, let's for example, ethical requirements, independence check, okay, acceptance of client in acceptance and continuance of client relationship in an for an audit, assignment of engagement teams, engagement performance, which includes my direction, supervision, performance review, consultation, even appointment of engagement quality control reviewer, and the areas that are required to be performed by the engagement quality control reviewer for the review. Then comes the monitoring system requirement with respect to the documentation. Very, very important areas that are there for this particular essay. So as I say, when I talk about particular review or responsibility, SA 220 specifically lays down okay, that the engagement partner shall take a responsibility for the direction, supervision, performance of the audit engagement in compliance with the professional standards and other legal regulatory requirements which are there. So it is the responsibility of the engagement partner to look after these things, okay, to look after the review. Okay, now supervision, which might include my tracking the progress of the audit engagement, considering the the issues that have been identified by the engagement team, addressing significant matters arising during the audit engagement, and analyzing their significance and modifying the audit approach so that I can tackle, or I can gather more audit evidence to support my conclusion based on the identified observations. Identifying matters for the consultation or consideration by more experienced engagement team member or any expert. It is the responsibility of the engagement partner. Okay. Now, when I talk about consultations, engagement partner needs to, take responsibility for the engagement team. The engagement partner shall take responsibility for engagement team, to undertake an appropriate consultation on difficult and contentious matter. Means he needs to look into the matter. He needs to look whether the team has consulted or not. It's not the responsibility of the engagement quality control reviewer. It's not the responsibility of the audit manager. He might delegate. Delegation is not an issue. Today, I can delegate my work to someone else, but that delegation will not take my responsibility away. Okay. At the end, I am responsible. I need to make sure that the work I have delegated has been performed or not. It's not like that, okay, I say to the audit manager, please go and do that. Done. I'm out. No, it's not the case. The engagement partner will still be responsible. He needs to be satisfied that the members of the engagement team member have undertaken appropriate consultation during the course of engagement. Okay. He needs to be satisfied that the nature and scope of the and conclusion resulting from such consultations are agreed and are appropriately documented and implemented in the audit. It's not only the performing the consultation, but the looking into the outcome also. Having said that all, okay, now you tell me which is the correct option. What is the correct option from this one? A, B, C, D. Come on, guys, pretty easy. Okay, so in this case, what should be the scene is, let's see one by one. Miss P should have reviewed the working paper, yes, regarding the consultation with Mr. K, yes, as it is the engagement partner's responsibility to ensure the appropriate consultations have been sought under the challenging matters. Absolutely correct. But read further. Let's see the B and C, BCD also. Miss P is not guilty of the negligence as she trusted in good faith. No, she should have reviewed. The engagement manager is responsible for not informing his partner. Also, engagement quality control reviewer is equally responsible. No. Engagement partner's responsibility was there. Okay. It was the responsibility of the engagement partner. Third, fourth option. Miss P should have reviewed the working paper regarding the consultation with K, as the engagement partner's responsibility to appropriate consultation has been sought under the challenging matters. Also, Miss P should have appointed a person of a relevant person and a member of institute as an engagement quality control reviewer. Now, if you see requirements of engagement quality control reviewer, okay, what it says that even the definition, a partner, other person, okay, in the or a partner or other person in the firm, suitably qualified external person, or a team made up of such individuals with sufficient and appropriate experience and authority to objectively evaluate before the report is issued. Okay. If you see, it's specified in the standard itself that the other person, when they are referred, other person in the firm, suitably qualified external persons, they should be member of institutes. Now here if I see, yeah, Mr. Z, an engagement quality control reviewer who was recently qualified graduate from prominent B school. He's a recently qualified. Now, it is said like the definition of the engagement quality control reviewer itself identifies that he should have the sufficient and appropriate experience and authority to objectively evaluate this particular the transactions, significant judgments made by the audit team and conclusion they have reached. But here he was a recently graduate qualified. He's not a partner. He's not a person who is a member of the institute. He's, even in the case of team, it is written that, okay, in the case of, the review is done by the team of individual. Such team should be headed by the member of institute. In this case, both scenario are not fulfilled. As a result, okay, Ms. P should have appointed a relevant person and the member of institute is an engagement quality control reviewer. This is more appropriate. Compared to A, D is more appropriate, and hence what I'll be doing is I'll be selecting D as an answer instead of A. Okay. So I'll write it down. Clear? Any doubt? Any doubt till now? These are the very important topics, very important terms, topics to discuss. My next question, if no doubt till now, then my next question will be, what do you understand by the roles and responsibility of the engagement quality control reviewer? When I talk about, let's say, engagement quality control reviewer, what is his roles and responsibility? What do you understand? Okay, what he is required to perform, which is when it comes to the roles and responsibility of engagement quality control reviewer. Let's say, for example, considering this same scenario, if we consider the same scenario that is there, okay, then what should be the role and responsibility of the engagement quality control reviewer? Now, this scenario, if I consider this one only, what was the responsibility of Mr. Z? He was the engagement quality control reviewer. What was his responsibility? What he should have done in this scenario? What should he have done in this particular scenario? Or let's say, for example, if I say, like we have already discussed, but let's say, for example, the engagement quality control reviewer was an appropriate person, a member of institute appropriately appointed by the engagement partner, and he missed out to review, then can it reduce the liability of the engagement partner? Can it reduce the liability of engagement partner? So all these questions are there. Okay, let's see the answer. Okay, the extent of the engagement quality control review may depend upon other things, like complexity of the audit engagement, whether entity is a listed entity, and the risk that the auditor's report might not be appropriate in the circumstances. So it depends upon the multiple things. Now, the performance of an engagement quality control review does not reduce the responsibility of the engagement partner for the audit engagement and its performance. Very important. As I said, even though I delegate my responsibility, I appoint an engagement quality control reviewer, that doesn't mean I'm not responsible for my part. Irrespective of whether engagement quality control reviewer is performing his duties or not, I am still responsible as an engagement partner. The engagement quality control reviewer shall perform an objective evaluation of the significant judgments made by the engagement team and the conclusion reached in formulating auditor's report. So, what is the role of engagement quality control reviewer? Shall perform an objective evaluation of the significant judgments made by the engagement team. Conclusion reached in formulating auditor's report. Okay. This may include, or this may involve, discussion of the significant matters with the engagement partner, review of the financial statement and proposed audit report, review of selected audit documentation relating to the significant judgments the engagement team made and the conclusion it reached, evaluation of the conclusions reached in the formulating audit report and the consideration of whether the proposed auditor's report is appropriate. See, discussion significant matter with the engagement partner. Now I'll give you an example. Okay. When I talk about significant matters, what could be the significant matters? In a particular audit, there was this one scenario that that there are some higher risk in an audit, presumed risk we call them, risk of fraud in revenue recognition and risk of management override of control, risk of fraud by management override of control. So in one of the audit, we wanted to reduce or to scope out the risk of fraud, okay, with respect to the revenue recognition. Now, in order to rebuild the the risk of fraud for the revenue recognition, we need some guidance. We needed some guidance, or we were we like, as an engagement partner, we were we required that, okay, it should be reviewed by the engagement quality control reviewer also, because it's a very critical area and very critical assumption that a professional judgment that we are making. So we documented everything, we considered everything, we based on our professional judgment later on decided, okay, there is no risk of fraud with respect to the revenue recognition. And this was a very significant matter, and specifically this matter was took up by the engagement quality control reviewer, and we discussed in detail that, okay, what is the the underlying assumptions, or why we are saying, what is the thought process behind this particular decision making, professional judgment. And we had to explain each bit of the professional judgment to him, to so that he can decide whether the conclusions that have been reached by the engagement teams are appropriate or not. Very, very deep discussion we went through with the engagement quality control reviewer at that particular time. That's I'm giving you a live example. Review of the financial statement and proposed auditor's report. So once the financial statement are ready and the audit report, draft audit report is ready, After that, we went with the, again, engagement quality control reviewer. We submitted our draft report with all the working papers, and the financial statement. He went through all the, again, he came out with his queries and he asked his queries, and, we replied to them, and we finally, got his clearance also. And accordingly, all was done. Review of the selected audit documentation relating to significant judgments. As I said, rebuttal of the risk of fraud on the revenue recognition, on critical areas of the revenue recognitions. There were certain work papers he went through in detail, and even we presented each and every bit of area in the work paper, like, like you do to your partner or to your senior. Okay, the work you have done, you present them, you explain them what you have done. In case of review, we went through the detailed review and we submitted, we presented each and every work paper to that particular engagement quality control reviewer. And accordingly, engagement quality control reviewer evaluated the conclusions that have been reached in formulating the auditor's report, whether qualified, unmodified, whatever it is there. Okay. And consideration of whether proposed auditor's report is appropriate or not. A critical area I'll talk about is the KAM, key audit matters. Even on the key audit matters, the engagement quality control reviewer had a detailed discussion. Why do you think this is a key audit matter? And why do you think these 10 points or 5 areas that he picked out, these should not be made part of the KAM? It's not just, okay, whatever we have given, he will accept it. So a detailed discussion happens. Each and every area is discussed, and you need to provide your basis for your professional judgment if you have taken any. For audit of the financial statement of listed entity, the engagement quality control reviewer, on performing any of the engagement quality control review, shall consider the following: the engagement team's evaluation of the firm's independence in relation to the audit engagement, whether the appropriate consultation has been taken place on matter involving difference of opinion or other difficulties or contentious matter, and the conclusion arising from the consultations, same above. So he needs to say, understand, and he needs to verify whether the consultations have been taken or not. So, like, earlier the engagement partner was responsible, same way engagement quality control reviewer is also responsible for that. Whether the audit documentation for the selected review reflects the work performed in relation to the significant judgment made and support the conclusions reached. So all these things are, required to be reviewed by the engagement quality control reviewer. Any doubt? Any doubt? Please feel free to ask your doubts. It's very, very, important for you guys also to clear out your doubts with respect to the essays that have been covered till now. No matter how silly your doubt is, that doesn't matter. Okay, if it is a doubt, please ask. Don't worry about the, whether it's silly doubt or it's a small question, doesn't matter. Any doubt, guys? Any doubt? Okay. If no doubt, let me move to the next one. Again, important essay 240, auditor's responsibility relating to a fraud in an audit of financial statement. ABC and Associates were appointed statutory auditor for the financial year ending on 31st March 2022 of XYZ Private Limited. While performing that risk assessment procedure and understanding the entity, the audit manager was keen to inquire with the management regarding their process for identifying and responding to the risk of fraud which they implemented in the entity. Okay. Uh, Also, audit manager was keen to understand how entities and management and those charged with governance identify the specific risk of fraud with respect to any classes of transaction, account balances, disclosure for which a risk of fraud is likely to exist. So, audit manager was keen to understand. Okay. So, he was keen to understand. Basically, he wanted to understand, okay, how things work, how things, how management is identifying all these areas. Now, to this query of the audit manager, the audit partner responded that the audit manager is not required to perform this particular procedure till the time there are identified and reported fraud instances in the company. So, till the time there are identified and reported fraud instances, he is not required to, what you can say, uh, perform these particular procedures. Kindly guide the audit manager and audit partner with respect to the auditor's responsibility relating to a fraud in an audit of financial statement. So you need to guide with respect to the auditor's responsibility relating to the fraud. Now, first, the auditor shall make inquiries with management regarding their process for identifying and responding to the fraud risk in the entity, including any specific fraud risk that management has identified or that has been brought to their attention, or classes of transaction, account balances, or disclosures for which a risk of fraud is likely to exist. So, auditor shall make. Auditor shall make inquiries with management regarding their process for identifying and responding to the fraud risk in the entity when management has identified the instance of a fraud in the company during last 12 months. The auditor shall make inquiries of the management and others within the entity only if the entity has an internal audit function to determine whether it knows any actual and suspected or alleged fraud affecting the entity. The auditor shall evaluate whether one or more fraud risks are present from the conclusions obtained through the auditor's risk assessment procedures. No other inquiries are required to be performed. So what do you think? Which is the correct option over here? So what do you think it's the correct option here? Okay, good, Shailendra. I'll take your question, Shailendra, after this particular question. Come on, guys. Which option is appropriate over here? Pretty easy, trust me. Pretty easy. See, now, again, as I said, very important concept. Reason because what is the responsibility of an auditor with respect to fraud risk? Okay. Now, when I talk about a particular fraud risk, what auditor is required to do? Audit manager was keen to understand how the entity, how the entity and management and those charged with governance identify specific risk. Okay. But audit partner responded that the audit manager is not required till the time there are identified and reported fraud instances in the company. So it's not necessary that the auditor or the engagement partner or the audit manager is only required to report or only required to inquire when there is a fraud risk, okay, or there has been fraud reported. But as an audit procedure or as an application, see, SA 240 is nothing but extended application of SA 315. If you see SA 315, okay, performing risk assessment procedures and related activities to understand the entity and its environment, okay, including its internal control. While performing or while applying SA 315, auditor is also required to perform the procedures which are enumerated in this particular SA 240. Means he is required to perform procedures to understand the fraud risk, how management has identified the fraud risk, how management is performing or dealing the fraud risk. Okay, let's say for example there is a company, a classic example, a retail store. Let's say you go to any retail store of clothes, you buy branded merchandise, some clothes or some retail stores are there, okay, where you can get the clothes, branded clothes. Okay, now there is a cashier, there's a stock, on the rack there are clothes and some dresses, some suits and everything is there, and there is a cashier. Now person goes, he submits he take out whatever he wants to buy, he go to the cashier, he submits to the cashier, cashier scans it and collects the payment. Now there is a fraud risk involved. Fraud risk is that the cashier might take the cash but does not record the sale. The cashier might record the sale, collect the amount in the cash, and later on siphon notes from the cash register or that particular machine. Okay, so how management is comfortable with respect to this? In most of the cases, these are the multi-brand retail stores. Okay, the owner is sitting somewhere else, he has just have open a particular store over here. How that particular owner is comfortable that okay, whatever transactions the cashier is making, I'm comfortable with that, there is no fraud in this. How? Means they have made some assessment, they have made some procedure, some internal controls, they have implemented something because of which they have a comfort. Okay, my particular store branch in XYZ mall or in XYZ area or on XYZ road is perfectly fine, there is no issue. That is the thing that it's within with this particular example, expanding to a larger scale on a company, there could be multiple operations of a company. Okay, there could be multiple store across the India, food store, fast food retail stores. You buy a burger, you buy a French fries. Owner is not sitting over there for that particular store who is looking, okay, how many French fries you sold, how many burger you sold, is there amount? No. But somehow still the management is comfortable that okay, whatever sale is being done, I am getting the amount. How? So that is something the auditor needs to understand, how the management's assessment of the risk that the financial statement are not materially misstated due to fraud, or what is the management process to identify and respond to the risk of fraud in the entity. That is something the auditor is required to understand. Okay, there are barcode system that when a particular item goes into a store, it is registered through a centrally managed store that okay, these barcodes are now into this particular store. At the stock count, it should match the report of the central warehouse and the actual stock lying in the particular store. Or let's say for example, when a particular sale hits the machine, okay, I scan the barcode, the sale is happened, the amount of cash that should be in the register automatically gets totaled up, and it cannot be changed manually. At the end of each day, cash count happens, or at the end of each week, cash count happens, something like that. So there are checks in place. In the same way, auditor is required or shall make inquiries regarding management process of identifying and responding to the risk of fraud. That how management process is there, including specific risk of fraud the management has identified or that it be brought to their attention with respect to any classes of transaction, account balances, or disclosure. So just giving an example, if you inflate that particular example to a larger company level, this is the auditor needs to understand, and it's not dependent upon whether any actual fraud is being done or not. So in this case, let's see the particular exam options over here. The auditor shall make inquiries with the management regarding their process for identifying and responding to the fraud risk in entity, including specific fraud risk. This is for the classes of transaction and fraud risks which are likely to exist. Okay, this appears to be good, but let's see other one. The auditor shall make inquiry with management when the management has identified the instance of fraud in company during last 12 months. No, means if there is no instance of fraud reported, that means I'm not required to perform any inquiries. There could be a chance that management's control are not that much good, that they were not able to identify any fraud or they were not able to detect any fraud. That doesn't mean that everything is going good. So incorrect. Auditor shall make inquiries of management and within the entity only if an internal audit function. No, inquiries do not depend upon the internal audit function. See, when there's a IA function, you can make additional inquiries, but that doesn't, stop you. If there is no IA function, you cannot make inquiries with the management. The auditor shall evaluate whether one or more fraud risks are present from the conclusion obtained through the auditor's risk assessment procedure. No other inquiries are required to be performed. No auditor is required to inquire with the management. So the correct option is my option C, option A. Clear? Correct, Aniket. Any doubt with respect to this? Any doubt? Okay, there is one question. How engagement quality control review is different from the auditor? See, engagement quality control reviewer is not the engagement partner. So there are two things, engagement partner and engagement quality control reviewer. Engagement partners is the responsible for, start to end of the audit engagement. Start to end of the audit engagement. When I talk about engagement quality control reviewer, he is responsible for the significant matters. But it is the prime responsibility of the engagement partner. So engagement partner is responsible for everything. And if I pick out some critical thing and significant things, then at that particular point in time, the engagement quality control reviewer is also responsible. It's not like that the engagement partner will not become responsible for the significant matter. No, he will be responsible. He is the prime responsible person. Although there are reviewers or there are not, he is prime responsible. But engagement quality control reviewer's job is to look into those significant matters. I hope I'm clear. Any doubt? Any doubt? Any doubt? Okay. If no further doubts, let me proceed further. While understanding the entity, uh, including the its environment, the audit manager gathered information about the management stone at the top and how management promotes efficient internal control environment and other policies throughout the organization. The audit manager was very comfortable with respect to the management adherence to the ethical and other policies. As a result, the audit manager was of the view that there was minimal or no risk of management override of controls. Hence, the audit manager decided to scope out to perform and scope out the following audit procedures to perform an efficient and effective audit. Effective audit. Sorry, I'll bring that here. So decided to scope out the following audit procedures to perform an efficient and effective audit, particular audit. Now, basically, he decided, okay, if there is no risk, then why should I perform this particular procedure? So it's better to scope out so that I can perform an efficient and effective audit. Okay, and which are these procedures that the manager thought to scope out? One, testing of appropriateness of the journal entries recorded in the general ledger and other adjustment made in the preparation of the financial statement. Review accounting estimate for biases and evaluate the circumstances producing the bias. So these two procedures he decided to scope out because he thought there is no or minimal risk of management override of control. So there was no or minimal risk of management override of control. That's why he decided to scope out. Okay. Now kindly guide the audit manager by selecting the correct option from below with respect to the auditor's assessment of the risk of management override of control. You need to select appropriate option. One, irrespective of the auditor's assessment of the risk of management override of control, the auditor shall design and perform audit procedures to test the appropriateness of the journal entries recorded in the general ledger and other adjustment made in the preparation of the financial statement, and to review the accounting estimate for the biases and evaluate the circumstances producing the biases. When the auditor assessment of the risk of management override of control is present, then only the auditor shall design and perform the procedure to test the appropriateness of the journal entries recorded in the general ledger and other adjustment made in the preparation of the financial statement. And to review the accounting estimates for the biases and evaluate the circumstances producing the biases. Okay. So if the risk is there, the second option is when the auditor assessment of the risk of management override of control is present, then only. Okay. So then only means if no risk is present, means he is not required to perform. I'll highlight this one over here. The difference. Irrespective of the auditor's assessment of the risk of management override of control, the auditor shall design and perform audit procedure to test the appropriateness of the journal entries. However, an auditor should only review accounting estimate for biases and evaluate the circumstances producing bias when there is a risk of management override of control. Although the level of risk of management override of control will vary from entity to entity, the risk is nevertheless present in all entities. Hence, auditors should only perform these procedures when applicable financial reporting framework precisely scopes it. So what is the correct option over here? What is the correct option over here? Out of 1, 2, 3, 4, what do you think is the correct option? Okay, good, Shailendra. Come on, guys, pretty easy. What should be the appropriate option you think over here? Okay, good, Aniket. Come on, guys, I'm expecting some more answers. See, understand the underlying thing over here. There are two things that we are discussing now. Number one, when there is no risk or minimal risk of management override of controls. Okay. Number two, because there was no risk, the auditor decided to scope out the following audit procedures, which is testing the appropriateness of the journal entries. Number one. Second, review of accounting estimate for biases. Number two. Now, you need to understand, okay, in which scenarios do you think this particular, decision making is correct, or whether this particular, scoping out is correct? Okay. See, as I told you, there are certain risks, presumed risk of fraud, or they are significant risk. And one is such presumed risk of fraud is management override of control. Because management is in unique position to, to conduct the fraud if they want, because they have an ability to manipulate accounting records. They have an ability to, manipulate financial statements by overriding the controls that otherwise are appear to be operating effectively. Today, if a CFO comes, no, I give you approval, pass the journal entry. Who will question that? It's a CFO. Okay. So they are in that particular position, they can override the controls, because at most of the time, you need approval of a CFO to pass, you need approval of a CFO to enter into a transaction, or legal department or something like that. But what if chief legal officer comes, okay, no, we need to enter into this transaction. He authorized the transactions. So they are at that particular position. Okay. Due to the unpredictable way in which these controls can be overridden. Okay, you have seen a lot of scams in past. A lot of examples are there. Very good example, Satyam, the management was involved, to override the controls. It is a risk of material misstatement, a huge material risk of material misstatement due to fraud, and thus a significant risk. Now, when it is a significant risk, okay, irrespective of the auditor's assessment, irrespective of my assessment, whether this is a significant or risk or not, I need to perform the following procedures. I need to design and perform the following audit procedures. Number one, test the appropriateness of the journal entries recorded in the general ledger and other adjustments, okay, made in the preparation of the financial statement. And for that, I need to make inquiries. I need to select journal entries. I need to consider, the need to test for journal entries and other adjustment throughout the period. Number two, I need to review accounting estimate for any biases, whether, the circumstances that are there produce any biases while previewing the accounting estimate. When I talk about bias means, let's say, for example, management wanted to, assess particular liability arising out of a litigation. Now management went, okay, and they identified, no, let's do not show any liability arising out of this particular litigation, rather show that's a contingent liability and of a small amount. So there is a bias of from the side of management. I don't want to show bad picture, I want to show good picture. Biasness. This biasness of good picture will bring down the amount of the liability of that particular arising out of that particular litigation as an estimate. Okay, because that's an estimate the management will make. So there's a bias. Now this bias, we are required to review these accounting estimate for biases, irrespective we identify there is a risk or not. Okay, because they represent a risk of material misstatement due to fraud. So it's not like that only, we are required to perform when there is a risk of management override of control, but irrespective of our assessment of risk of management override of control, we are required to perform. And hence, the answer here will be not C, not B, not D, C. Why not B? Because it says that then only you are required to perform if there is a risk. That is wrong. Irrespective of the risk, we are required to perform. In third, it says irrespective of the risk, you are required to perform general ledger testing, but review of accounting estimates are only required to perform when there is a risk of management override of control. That's why. And the fourth one is when the applicable financial reporting framework precisely scope it. See, testing a particular area is based on the auditing framework, not the accounting financial reporting framework. So whatever areas you are required to test, how you are required to test, what audit procedures you are required to perform, it's not there in the financial reporting framework. No, that's wrong. So that's why 4 is wrong. The correct option is A. Any doubt? Any doubt with respect to this? Any doubt? Okay. If no further doubts, then let me proceed forward. There is one more thing I want to discuss. Okay. ABC and Associates were appointed statutory auditors for Express Head Private Limited for the financial year ended on 31st March 2022. While finalizing the audit plan, the audit manager believes that the identifying and selecting journal entries and other adjustments for testing is critical and appropriate. And appropriate care should be taken while selecting the journal entries, as there can be high risk of material misstatement associated with inappropriate override of controls over journal entries. Kindly guide the audit team regarding the relevant matters when identifying and selecting journal entries and other adjustments for testing and determining the appropriate method of examining the underlying support for these items selected. So you need to guide with respect to the audit team, with respect to the how to select journal entries, what are the critical things they need to focus. Okay, what are the critical areas they need to look into, and number two, what are the things they are required to look into the supportings. Okay, so any answer on this? Before I proceed further, I want to understand from you guys, what do you look for a journal entry when you select a particular sample, or what things you will look into the supportings? What are the things that critically define what samples are required to be selected for testing of a journal entry? What factors influences? Correct. Good, Aniket. Come on, guys. Some try to answer that. I don't want an exact answer, but something, like, okay, what do you think? What areas come into your mind when you talk about, okay, journal entries? What to do? What to see? Which particular factors you will consider while selecting the appropriate samples, or while reviewing the supporting documents for those particular journal entries? Come on, guys. Okay, let me provide the answer. See, when you are looking for a journal entries, okay, now again, it's a but there is a risk involved. Material statements, there is a risk for the material misstatement of financial fraud, okay, due to manipulation of financial reporting process or by recording inappropriate journal entries. So there can be a risk, high risk involved in this particular area, okay, or any unauthorized journal entries might be posted. Now, these can occur throughout the year or at the period end. There is no particular fixed time, but this may occur throughout the year or at a particular period end, or by management making adjustment to the amount reported in the financial statement that are not reflected in the journal entries, such as consolidation, adjustments or reclassification, something like that. Means they are not there in the particular financial your books of account, but over and above that, they are passed by the management. Further, the auditor's consideration of the risk of material misstatement associated with inappropriate override of control of journal entries is important, since the automated processes and controls may reduce the risk of inadvertent error, but do not overcome the risk that the individual may inappropriately override such automated processes. For example, by changing the amounts being automatically passed to the general ledger or to the financial reporting system. Means IT system helps us to prevent the kind of errors, but they do not overcome the risk. Reason because IT systems can identify the errors, let's say arithmetical error, debit credit total not matching, you cannot post this particular entry to this particular account, something like that. But still those systems can be override. I can override those systems. Furthermore, when the IT is used to transfer information automatically, there may be little or no visible evidence of such intervention in the information systems. Okay, if everything in the IT environment, there might be a chance. Okay, the evidence might not be easily available. Who has inappropriately passed? I give you one example. In most of the ERPs, there is a automatic depreciation run process. That the system or ERP at the end of the month will calculate the depreciation for the month for all the fixed asset and will post it to the general ledger or in an individual each fixed asset. Now let's say, for example, the system ran automatically, they posted the journal entry, they posted the depreciation, but someone altered the logic of that particular depreciation run. And what happened is, in the ERP, the depreciation run happened, depreciation was calculated, it was posted into the depreciation expense ledger, but the counter effect was not posted to the fixed asset. Rather, it went to someone else, somewhere else, something like that. So anything can be done with respect to the IT, and you will not able to get a trace who altered the logic or why this happened or something like that. So when identifying and selecting journal entries and other adjustments for testing and determining appropriate method for examining the underlying support for the item selected, the following matter are of relevance. Okay, these are the important matters that you need to consider. The risk of the assessment of the risk of material misstatement due to fraud. Okay, the presence of the fraud risk factors and other information obtained during the auditor's assessment of risk of material misstatement due to fraud, and may assist the auditor to identify a specific class of journal entries and other adjustment for testing. For example, let's say when you performed your risk assessment, you identified there are chances that there could be a risk in cash sales. So you will focus areas of the cash sale when you will select the journal entries. So based on your risk, you will select risky areas. Risk assessment, you will select risky areas. Controls that have been implemented over the journal entries and other adjustment. Effective controls over the preparation and posting of journal entries and other adjustment may reduce the extent of substantive testing necessary, provided that they have the auditor has tested the operative effectiveness of the control. Okay, means the controls that are present, okay, they may reduce your work, but before that you need to test those controls to understand whether any a reliance can be placed upon those controls. So the controls also play a very important role in understanding whether any reliance can be placed or not. Then the entity's financial reporting process, okay, and the nature of evidence that can be obtained from that. So for many entities, routine process of the transactions involve combination of manual and automated steps and procedures. Similarly, the processing of journal entries and other adjustment may involve both manual and automated procedures, okay, and controls. When information technology is used in the financial reporting process, journal entries and other adjustment may exist only in electronic form. So you need to consider what are the steps that are automated, what are the steps that are manual with respect to the financial reporting process, and accordingly you can understand, okay, I need to scope in or I need to select such kind of journal entries. Then inappropriate journal entries or other adjustment often have a unique identifying characteristics, such as made to unrelated, unusual or seldom accounts, Okay, or made by individuals who typically do not make journal entries, recorded at the end of the period or post closing entries that have little or no explanation or description, made either or before during the preparation of the presentation of financial statement that do not have account numbers, means they are topside entries containing round numbers and consistent ending numbers, 5 lakh, 75 lakh, 8 lakh, something like that, round applied to accounts that contain transactions that are complex and unusual in the nature, contain significant estimates and period and adjustment, have been prone to misstatement in the past, have been reconciled on a timely basis, or contain unreconciled differences, contain intercompany transactions, are otherwise associated with an identified risk of material misstatement due to fraud. So the inappropriate journal entries or adjustment can be parked in such kind of accounts. So we need to understand such kind of accounts also. Okay. Then in audit of entities that have several locations or component, consideration is required to be given to each location for the selection of the journal entries. Okay. I should focus on each and every location, and I should select from multiple locations rather than selecting from one location. Journal entries or other adjustment process out of the normal course of business. Okay. Like non-standard journal entries may not be subject to the same level of internal control as those journal entries that used at recurring basis to record the transaction, such as monthly sales, purchase, and cash disbursement. So journal entries which are outside the normal course of business, they require some more focus compared to the journal entries which are normal course of business, which are within the normal course of business. So accordingly, these are the factors that are required to be considered while selecting the journal entries. Clear? Any doubt, guys? Any doubt with respect to this? Any doubt with respect to any of the questions that we discussed? Okay. If no further doubts, then what I suggest is if no further doubts, then let's take a quick 10-minute break. After the break, we'll gather back and we'll continue the session. Then I'll start the series 500, SA 500 series, and then we'll continue that. Okay. Let's take a quick 10-minute break.
Hello everyone, welcome back. So now what we will do is we will start our essay 500 series, and I will be covering the rest of the essays. Okay. So any doubt till now with respect to any of the area? Any doubt? I'll suggest if you have any doubts, ask freely, because it will enhance your clarity and it will help you to understand the concepts. Okay. No issues. I'll continue. Meanwhile, if you have a doubts at a later point in time also, please ask freely. Okay. Now I will be starting with essay 500. Now essay 500, as you know, is basically my audit evidence. Okay. So essay 500 talks about the audit evidence. What is the critical thing about the audit evidence? What are the things that we are required to have with respect to an audit evidence, and the other aspects of the audit evidences. Okay. Now, when I talk about audit evidence, first thing comes into the mind is that what should be an appropriate audit evidence, and why, from where we should get an audit evidence, basically. Okay. So let me open the notes for you guys also. Now, when I talk about audit evidence, the first things, the thing that is comes into the mind is the document or evidentiary things that we collect to support our opinion. Okay. So let's say, for example, I'm performing a particular testing. Today I'm going and let's say journal entries. Okay. I'm going and testing a journal entries. Now, what is the objective of testing the journal entries? Basically, why I want to test the journal entries? That is very important. Okay. So that's the objective of the auditor, to design and perform audit procedures in such a way that the auditor can obtain sufficient and appropriate audit evidence from that particular thing. Okay. So the underlying thing is obtaining the sufficient and appropriate audit evidence. Now, whatever testing today I will do, the prime responsibility will be, or you can say the underlying thing will be obtaining the sufficient and appropriate audit evidence. Okay. Whatever testing I will be performing, it is the prime responsibility that will be there. Or you can say prime objective. Obtaining sufficient and appropriate audit evidence. Now, in order to obtain sufficient and appropriate audit evidence, okay, why I need that particular audit evidence? So that I can draw the conclusions. I can come to a conclusion whether the evidence that has been obtained is pointing out to any observation, issues in the audit which requires me to modify my opinion or not. So that's the purpose of audit evidence. Okay. Now, when I talk about appropriateness of the audit evidence, as I told you, there are two things I am highlighting over here: appropriateness and sufficient audit evidence. When I talk about appropriate or appropriateness of the audit evidence, what I mean? So the appropriateness of the audit evidence refers to the quality of the audit evidence. And when I talk about the sufficiency of the audit evidence or sufficient audit evidence, it talks about the quantity of the audit evidence. Okay, so this is how the quality and the quantity of the audit evidence is there. Now, very important thing. The important part is the audit evidence. What do you mean by audit evidence? I know I need to have a quality, I need to have a quantity, but what is audit evidence? So when I talk about audit evidence, okay, it is the information that is being used by the auditor. It's the information that is used by the auditor in arriving to a conclusion. So let's say, for example, I'm testing a journal entry. Okay, I'm testing a particular journal entry and I'm coming to a particular observation. I'm coming to a particular, what you can say, conclusion. Okay. Now that conclusion that is there, okay, journal entries are good. The control is operating effectively or everything is fine. That conclusion I'm reaching based on certain things, the samples that I have tested or the evidence I have gathered. And that sample I have tested or evidence I have gathered is the audit evidence on the basis of which I'm saying, okay, journal entries are good. Now, what assay 500, see, each and every assay has a particular objective. Okay. Each and every standard has a particular objective. Now, the objective of each assay, okay, we need to fulfill that particular objective. So, SA 500 has an objective that auditor is required to design the audit procedures in such a way that he should collect the sufficient and appropriate audit evidence. That's the objective of SA 500. Okay. Now, for that, there is a guidance or requirement given throughout the essay. So each and every essay provides some guidance how you can meet, how you can achieve your objective. Okay. So now the sufficient and appropriate audit evidence when we talk about. Okay. So auditors is required to design the audit procedures. We know that we will design the audit procedures and we'll get the sufficient and appropriate audit evidence. When designing performing the audit procedure, okay, now there are certain things the auditor needs to consider. That is the relevance and the reliability of the information that is being used in an audit evidence. I cannot, use anything as an audit evidence, first of all. If I'm using anything as an, if I'm using the information that I've gathered, I need to ensure that the information that I have gathered is reliable and relevant. Then only I can consider that information to be, useful for the purpose of my audit evidence. Now, how will I ensure that the reliability is there or relevance is there? So relevance deals with the logical connection. Okay. For example, if I'm testing the journal entry, the logical connection here is that, okay, the journal entries which I'm testing are good. The data that I have received for each and every sample matches with the journal entry, supportings are appropriate, logical reasoning is there, everything is there. So the connection is there with the evidence that I have gathered and the samples or testing I have performed. Okay. And that is at the each assertion level. And when I talk about assertion, remember in essay 315, I discussed the assertion, or in essay 330, in detail, I discussed the assertion. So each assertion level, I get the comfort. Okay, this evidence is good. That's the logical connection with each assertion of the audit evidence. Okay. Let's say, for example, accounts payable. Now, if I'm testing account payable, what is the evidence I can gather that, okay, the balance which is there of the account payable has been confirmed by a vendor, or I have subsequently paid the amount. Okay, either external confirmation is there, subsequent payments are there, appropriate invoice is there, there is no aged balances, or if there is any aged balances, then there are appropriate provisions or reasons available. So these are the evidence that I have gathered. Let's say, for example, account receivable. Now, when I talk about account receivable, okay, what I'll do is I'll get the confirmations. I'll get the confirmations. Now, these confirmations that I have will help me to understand, whether the account receivables are good or not. And accordingly, what will be the scenario is these confirmations will form an audit evidence. Okay, these confirmations will form an audit evidence. Now, these confirmations that will form an audit evidence should have a logical connection, means the sample which I want to check of, let's say, receivable A, B, C, confirmations are for those A, B, C receivables only, or the confirmations are of that particular period for which I want. Evidence can be of, document or information can be of any nature. Let's say, for example, I want a confirmation for 31st March 2022. I received a confirmation of 30th September 2022. Doesn't matter. It's not relevant for me. Reason because there is no logical connection between the test I'm going to perform and the information I have. So relevance is not there for that particular information. Relevance is not there. So relevance means the logical connection, basically. So for each and every audit evidence that I have, I should have the relevance plus reliability. What if the confirmation has been given by the management itself, but not from the external third party? So same way, there should be reliability for that particular evidence. Okay. Now, that was the relevance and the reliability. The second thing I want to check, or I need to check, is when I'm using an information as an audit evidence, okay, then whether that evidence or information is prepared by the management expert. Okay. Now, sometimes informations are not directly available. These are not available directly, but they have been prepared by the management expert, or they are related to the field of an expert. For example, valuations. In case of a valuation, you cannot just directly verify the valuation when some experts are involved. So if management expert is involved, if information is prepared by the management expert, then what we need to do? Then first we need to understand whether the management expert has that much competency, capability, or objectivity, so that I can rely upon his information. So I need to evaluate competency, capability, and objectivity. Okay, of that expert. That is CCO, competency, capability, and objectivity. I need to evaluate CCO. Second, I need to evaluate, or rather evaluate, I need to understand the work of that expert. work that expert has performed. Why? Reason because in order to rely upon the information that has been provided by the expert, or in order to even process also, you need to understand what he has performed. Let's say, for example, valuation. Valuation of, let's say, land. In case of a valuation of land, first of all, you need to understand whether the valuation is done by a actuary valuer. If yes, then whether he is certified. And competent, so whether he is certified and whether objectivity has been maintained. Then I need to understand the valuation performed. Now this particular thing, the valuation performed, okay, is nothing but the understanding the work of that expert. I need to understand that work. Okay. And when I say about valuation performed, it may include estimates, assumptions, okay, methodology. All these things I will understand. Then what I'll do is I will understand whether this particular valuation is relevant. Now comes to the relevancy. This gave me comfort over the reliability. So this particular area gave comfort to me over reliability. Because I was making sure that, okay, valuer is correct. The work performed of the valuation by the valuer is appropriate, or estimates, assumptions, methodology that was giving me comfort over the reliability. Now comes the relevance. Relevance and the reliability. Now comes the relevance. Now with respect to the relevance, what I need to do, I need to understand whether the valuation performed is of the date for which which I need, let's say 31st March. It may happen that he has performed the valuation 6 months ago, not relevant for me. Or property considered for valuation is the property I am looking for. Let's say, for example, there was a land, okay, a particular plot 1. Now there was another plot 2, adjacent to plot 1. So while performing the valuation, what valuer did is, valuer took plot 1, but he also took some of the area of plot 2 in this valuation, because either disputed area, he was not able to separate the that particular area, or whatever reason might be. So he did something like that. So when I got the valuation, I got plot 1 plus some portion of plot 2. As a result, this might not be relevant, because for me the asset is only plot 1, or the land is only plot 1. So how much relevant the valuation is, as in, audit evidence, that's very important. So this talks about the relevance. The third point is evaluate the appropriateness of that expert's work. Okay, as an audit evidence. I'll write as of now AE for audit evidence for the short form, but please do not use these, abbreviations in exam. Use the full term. Okay. So, as I said, I'll evaluate the competency, objectivity of the expert, appropriateness of the expert work. When using the information produced by the entity, I need to evaluate the reliability and completeness and accuracy of the information, basically. Clear? Any doubt? Kaushiki, I have received your doubts. What I'll do is, I'll take it up at the end of the lecture. Will that be fine? Because there are too many. I'll continuously take up at the end of the lecture. Okay, but I have noted that. Don't worry. Any doubt till now with respect to this? Okay. Now, how can you ensure that the like the evidence that you have obtained, okay, is sufficiently reliable or relevant? So what you need to do is simple. There are 3 things you need to ensure to understand whether the information is reliable and relevant. For reliability, you need to refer to accuracy and completeness of information. Okay. For the relevance, you need to understand the purpose, auditor's purpose for which the information or evidence is collected. Okay. and whether the information is precise. Okay. So to understand the relevance, I need to understand with the purpose, and to understand the reliability, I need to ensure the accuracy and the completeness of the particular evidence or information. Now, what if you have a doubt over the reliability or the relevance? What you will do? Inconsistency in audit evidence. Let's say, for example, I'll give you one good example. Yeah. Okay. I'll give you one good example. Let's say, for example, you were supposed to require to test accounts receivable. Now, what happened is, like, you performed multiple tests. You went for external confirmation. Okay, and you went for subsequent collections. You verified both, basically. Not only external confirmation, you went and verified the subsequent collection also. Okay. Now, there was a party, let's say XYZ Limited, having outstanding of rupees, let's say 42 crore. Now, this was aged more than 2 years. Aged more than 2 years. XYZ confirmed that. You got the confirmation, he confirmed it. Now, when you went for subsequent collection, still the amount was not collected. Still the amount was not collected. Okay. So if the amount is still not collected, then you have a two audit evidence that basically audit evidence contradict to each other. Now, on the one hand side, you have the audit evidence that okay, the amount is required to be collected and he has been that has been confirmed. Second, still the amount was not collected, even though there was a confirmation that amount is due. You have a conflict between two evidences. What you will do? What you will do in this case? Simple. You have two different evidences, but there is a what you can say conflict between two evidences. How will you deal with this situation? Simple. If I have a doubt on, if I have a conflict between two audit evidence, okay, then what I will do? Simple. I'll perform additional procedures. Additional procedures as in what I'll do is I will test for credit risk, or you can say for bad debt provision. How? I may go for financials of XYZ Limited. And check his you can say financial position, whether that particular entity is solvent. His cash position, cash liquidity, something like that, to understand whether the entity is capable to pay the amount or not. Although they are confirming, it may happen that okay, they are on the brink of the bankruptcy. Anything can happen. This will give me the clarity what additional procedures are based on the conflict. I need to decide my additional procedures, and accordingly I need to go proceed forward. Okay. So in case of a doubt or a conflict, perform additional procedure and consider the impact on your audit report. That is a simple thing you can do. Okay. So if the audit evidence collected from one source contradict another, and if there are doubts regarding the reliability of the information, then perform additional procedures or modify the current audit plan necessary to resolve the matter. Clear? Any doubt? Any doubt? Okay. If no doubt, then I'll take one example. I'll present certain audit evidences, okay, and you need to consider with respect to the audit evidence gather and their accuracy with respect to the other evidences. Okay. So let's say, for example, you are senior on an audit engagement, and you have been assigned to perform payroll engagement. Okay. For FY 21-22. You have obtained the current year and from the previous year the following data. On 31st March 2021, company had, let's say, for example, 400 employees. On 1st April 2021, company laid off 10% employees with immediate effect. Okay. On 1st June 2021, remaining staff received 5% hike in pay, and on 31st March 2022, okay, 100 employees received rupees 10,000 as an additional bonus for a year. Okay. Now you as an audit senior have gathered this particular evidence. So evidence gathered, evidence gathered by senior is first calculation of payroll cost for year performed by audit team member. Written representation by management over the accuracy and completeness of salary and wages booked in accounts. Okay. Recalculation of revised pay, or you can say salary, of certain selected employees by internal audit function giving comfort over operating effectiveness of payroll control. Okay. Now what you need to do is you have these particular information and this particular evidence gathered. Now you tell me, you need to rank in the order of reliability, which is the most reliable audit evidence and which is the least reliable audit evidence. So first, second, and third. Just order in the rank of reliability, which is the most reliable audit evidence and least reliable audit evidence. So you need to just rate in from the perspective of reliability. Most reliable and least reliable. Okay, Kaushiki. Okay, Saksham. Come on, guys, pretty easy. Correct, Sharindra. Correct, Aniket. See, I'll just tweak a bit. Calculation of payroll cost by the for the year performed by the audit team member will be the highest one, the first reliability. Second will be the recalculation of the revised pay salary of certain employees by the internal audit function. Okay, then this will be the second one, and the third one will be the written representation. So this will be the order of reliability, because if something has been performed by the audit team member, it will be more reliable compared to the internal audit function and compared to the written representation. So this will be the reliability order. Now, if you have any conflict between these two, let's say for example, if you have any conflict between these two, then you know which one to choose. So you will rely more on this compared to this. So this will have a precedence over this particular second one, written representation, and you will not consider the representation, rather you will go with the calculation. Clear? Any doubt? Any doubt? So this was SA 500 basically. Nothing much in SA 500, pretty simple. There are three things. One, what is the objective? Second, how we can gather the evidence. Third, when it's the inconsistency, what to do. Okay. If no further doubts, then let me proceed to the next essay for today. Very important one. Essay 501. Okay. Now, essay 501. Okay. Audit evidence for specific consideration. Now, this particular essay covers three critical areas. One, litigations and claims, inventory, if material, and segment information. This essay extends the application of 500. Okay, this essay tells us how to gather evidence, what testing we are required to perform in these specific scenario to gather audit evidence, because these are specific items and they require specific consideration. Okay. Okay, let me go forward. Now, again, as I said, each essay has an objective. This essay has an objective that the objective of the auditor is to obtain sufficient and appropriate audit evidence with respect to completeness of the litigation claims. Completeness, very important. Existence and condition of inventory. Okay, like how the inventory is existing, how much complete it is. Presentation and disclosure of segment reporting. This is the objective that auditor is required to obtain. Now, to achieve this objective, there are some requirements again which are given in the essay. We need to understand what are the requirements. Okay. Now, when I talk about inventory, first I'll take up with the inventory. Okay. When I talk about inventory, when inventory, if material, then what we need to do is, and how we can basically ensure that the existence and the condition of inventory is what is there in the books of account. Let's say, for example, give me a minute. Okay. Let's say, for example, in financials, you have an inventory, raw material, let's say rupees FY 21-22, rupees FY 2021. Okay. And let's say if raw material was 5 crore and last year it was 10 crore. Finished goods, last year it was 10 crores. This time we have finished goods of, let's say, 15 crores. Okay. Now, let's say, for example, as of now, other information, less provision for slow moving stock and provision for obsolete inventory. Last year, let's say the provision on 10 crore of fixed asset. These are, let's say, for example, this is for both fixed asset, FG. Last year on FG of 10 crores, I had a provision of 1 crore on slow moving and 1 crore for absolute. This year, I have no provision. I have reversed the provision. Okay. Now, considering this particular example, your first question will be, okay, if there is no provision, then whether this condition of this inventory, which was absolute, like whether I have sold that inventory, or is there any, absolute inventory not present from this particular inventory? Is there any slow moving inventory not present in this particular inventory, or whether this inventory actually exists? So I have assertions which talks about completeness, accuracy, existence, okay, valuation. I'll take it 4 as of now. I'll come to the later on. Let's say, for example, I want to ensure the completeness of the inventory or the existence of the inventory. What you will do? If you want to ensure the existence of the inventory, what you will do? If you want to ensure the existence of the inventory, I want the comfort over the existence assertion of the inventory balance. What I will do, what audit procedures you will perform. Simple. Appropriately correct, Aniket? Absolutely correct, Sharendra. What I will do is I'll go personally over there and with my own eyes, I'll verify whether the inventory is actually there or not. Okay. I'll go and verify, right? Along with, in detail that, okay, this is the inventory that I'm looking for and it is there. And that is by attending the physical inventory count. So when inventory is material to the financial statement, the auditor shall obtain appropriate and sufficient audit evidence regarding the existence and condition of the inventory by first, to ensure the existence, I'll attend the physical count. Unless impracticable, star mark, and star mark says way below, unless conditions apply. So you need to attend physical count. Okay, fine. Now what you will do by attending physical count? we need to do something when we go to the physical count. We cannot just, go to the physical count. They are counting. I am attending the count and sitting on the chair. No, I need to perform something. That is what I do in the physical count is I will evaluate the instruction that is given to the management. Okay, management was told, please do not count these 10 inventories because there is a problem, or these are not present, or these are, like obsolete inventory. So do not count these. Just avoid, don't tell to anyone. What if the instruction contains these type of details? Like in other, other words, in coded words. So I will evaluate management's instructions. Okay. And procedure for recording. Okay. Inventory count, physical inventory count. I'll observe the performance of count. Observe means what I will do is, let's say, for example, management is counting. Okay. Management came across an item. Okay. 10 pieces of wooden table. Hypothetical example, 10 pieces of wooden table. Now they searched all premises, but they were not able to find 10 pieces. Later on, there was chair. There were 10 chairs. So someone, you said, okay, these are the 10 pieces of the table, tick mark, then found. So I will observe whether they are actually counting the correct item or not. This is a hypothetical, vague example, table and chairs. But again, in real life, there are electronic machineries, there are items which you will not able to identify the differences. One example, I went to an inventory count what they were making is they were making refrigerators. Okay. Now they were making refrigerators, and you can say other items like vacuum cleaners. Okay. I went for the inventory count of vacuum cleaners. Now what they were doing is there are many parts. There are many models of vacuum cleaners. So whatever internal part, the motor, the pipes and everything were kept. Now there were different kind of pipe, big pipe, small pipe for vacuum cleaner, brushes, motors, everything was there. Now when they will say, okay, motor of this much kilowatt of these many units. Now if that is not a 10 kilowatt motor, or this is 5 kilowatt motor, or if there is even slightest change in the model, there is a difference, power capacity, the suction capacity, everything changes. Even if there is a slight change. So how will you actually identify that they are counting the correct? They will say, okay, motor of 10 kilowatt capacity. It is actually 9.9. They both are different. So in that case, we need to thoroughly observe the inventory count in such a way that, okay, whatever items they are counting is appropriate. Then after, observing, I can go and inspect the inventory myself, by myself. I'll go and I'll inspect the inventory. Okay, I'll say, okay, you want to count this? I'll go, okay, this is the inventory, good, not good. I'll go to the warehouse, I'll check which area of the warehouse is good, which area where the, damaged goods are kept. I'll take a round in the whole warehouse. I'll, note all the details. Even in some cases, we take out the pictures of the warehouse for our, as an audit evidence, and we'll keep it. Okay, this is how the inventory was kept, and because of which we are seeing that, okay, this inventory is not in good condition. Sometimes, when we perform a stock count for external third party like banks require us to perform the count. They also ask us sometimes, to provide the audit evidence that how the warehouse is, whether the appropriate details are there or not. So as an audit evidence, we include those pictures in our work paper and we provide them. Okay, on the basis of which we are saying, okay, this is the scenario. Because today, if I go, I perform the count, I say, okay, the inventory is not kept in good condition. In 2 days, they will change everything. They will color the warehouse. They will repair everything. And when, they will present good pictures, what you will do? That's why we take audit evidence in that case. Then performing test counts. What is test counts? Basically, I will select certain inventory from the sheet, will check to the floor, and then I'll pick something from the floor and will check to the sheet. So usually we call it floor to sheet and sheet to floor. Okay, from floor, I'll pick up something, I'll check in the sheet, and second, I'll pick up something from the sheet, I'll check to the floor. Clear? Then performing audit procedures over the entity's inventory records to determine whether they actually reflect the actual inventory count. So for example, whatever I will do, I will ensure the summary or the impact of this particular count. Means, let's say for example, here there were differences. Certain inventories were not present. Okay, so there were differences in inventory count. They identified certain inventory is missing. Deviations, missing inventory. All these things, I will verify whether these adjustments have been appropriately recorded in books. This will give me comfort over the completeness. Okay, this will give me comfort over the completeness, because what will happen is, by this way I can ensure, okay, the inventory is complete, which is appearing in the books of account. Existence by attaining the physical count, and by verifying these adjustments, I can get the comfort over the completeness. Okay, again, accuracy I'll get by this way only. I'll perform the count. Valuation, very important. When I'll go for the valuation, I'll check the accounting policy, cost or NRV. Like this way, I'll perform some procedures to gather the evidence for the inventory. So attend physical count unless impracticable, evaluate management instructions and procedure of count, that is inquiring, observe management physical inventory count, inspect inventory and its condition, re-perform inventory count or retest. Remember, there are certain procedures that are there for the test of substantive test: inquiry, observation, inspection, re-performance. Remember something from SA 330, 315? We have already discussed this area. Same, it's same. If inventory count performed at any other date or inventory count was not feasible at the closing date, then what you will do? If inventory count was not performed at 31st March, if inventory count was not performed, let's say during the year, but it was performed after the year, what you will do? How will you ensure the completeness? In that case, if inventory count was not performed during period close or year close, then I need to perform additional procedures I need to perform additional procedures to obtain audit evidence about changes in inventory between count date and date of financial statement. How will I do that? Very simple, pretty simple. I'll show you. Just give me a minute. What I will do is simple calculation, nothing else. I'll show you what calculation I'm talking about. I'll perform roll forward procedures. Roll forward or roll back. So let's say, for example, inventory count was done after 31st March. Let's say on 30th June. So inventory on 30th June 2022. Let's say, for example, you have 15 lakh rupees. Yeah, 15 crores. Okay. Then what I will do is I'll reduce all the purchases from 1st April 2022 to 30th June 2022. Or in other words, all receiving of inventory. Purchase plus receiving means I have received the goods. GR, usually we call it GR. Okay. Whatever GRN has been done. Let's say during the period I received goods of 3 crores. Less, I'll add back sales, same. From 1st April to 30th June, this will be all outward. Inventory. Okay. So that's outward inventory. Let's say, for example, outward was 4 crore. Now there will be, I'll add or less accordingly adjustments if are any there. For example, your scrap sale, transfers, okay, conversions, etc. For sake of simplicity, let's say there is nothing. So in that case, you will get total inventory as on 31st March. So by doing this, you will get inventory as on 31st March 2022. That will be near to my 16 crores. And for these individual items, for this less add, what I will be doing is, for these individual items, I may gather some additional information to ensure this figure is complete and accurate. This figure is complete and accurate. So whatever inventory I will get, in current case, let's say, for example, 16 CR. Okay. This I will match with my financial records or inventory as on 31st March 2022 in books, which was there. So this is reperformed, recalculated. Simple. So I'll perform some additional procedures, that is to check the changes of inventory between the count date and date of FS. Clear? Okay. Now If I am not able to attend physical inventory count due to unforeseen circumstances, remember this particular says I need to attend physical count, but what if this condition applies comes true? If you are not able to attend physical count, okay, what if this star marks get triggered? What you will do in that case? So in that particular case, what I will do is, if I'm not able to attend physical count due to some unforeseen circumstances, I need to, observe some other physical count. Either I need to observe some other physical count, of some other date, okay, or alternate date, or I need to perform alternative audit procedures, to obtain sufficient and appropriate audit evidence, okay, regarding the condition of inventory. Now, if there is one more, possibility, what if the inventory is not lying with me? The inventory is not lying with me, but the inventory is present with third party consignment. Inventory present with third party. What I need to do? Pretty simple. If inventory is with the third party, again, I need to obtain sufficient and appropriate audit evidence, but by how? Either I can request confirmation from the third party, okay, request confirmation from the third party with respect to the quantity and with respect to the condition of inventory, or I can ask third party okay to allow me to perform inspection. Okay, I can ask them, please allow me to perform the inspection, or even I can ask them, okay, allow this particular person of mine to perform inspection. Both. So this is what I can do when the inventory is present with the third party, but with not the management. Clear? Any doubt? So perform count at any other date, then the perform additional procedures. That is the one. If you are, rule forward one. If you are not able to perform additional procedures, then modify the opinion. This is for the star mark. For inventory with third party, which is material, request third party confirmation for existence and condition, perform inspection or other procedure if possible. Simple. Any doubt? This was with respect to the inventory. Any doubt, guys? If no doubt, let me take, I'll take up your questions, Kaushiki. Okay. So first one is, what is ICFCR in internal control framework in India? See, ICFCR in India, if you refer to the company's audit that we discussed, okay, there we discussed about ICFCR. If you check, let me go back to that particular topic. I'll show you where we refer to that. Yeah, let me share my screen. Okay. Remember when we were discussing about the company audit, we discussed about whether the company has adequate internal financial control with reference to the financial statement in place and the operating effectiveness of such controls. This is 143.3. In 143.3I, there is a clause I basically, okay, which talks about ICFCR. So auditor is required to provide on that. And we discuss about the exception to which company it is not applicable. So this is the framework in India. I hope I'm clear. Okay. Then your next question is with respect to SA 220. So you are saying that, and before issuing any audit report, the firm needs to perform the quality review. See, with respect to SA 220, if you particularly go through the quality control requirements, okay, over there it is specifically given like in which cases a quality control reviewer is required. Okay, so for example, there have been cases like there has been for the audit of listed entities, okay, or for entities where the firm thinks about, okay, quality control review is required. In those cases, they are required to appoint quality control reviewer. So for listed audit of listed entity, it is necessary, but for other engagement, it is upon the firm to decide based on the risk. So in that case, yes, it becomes mandatory to perform quality control review, but that is something performed by the quality control reviewer. Then your next question is, in SA 220, in client acceptance and continuance, why we see engagement team capability to comply with the ethical requirement? Okay, very good question, I'll say. Why we are looking for the capability, okay, of the team. Now, see, it is mandatory to comply with the ethical requirements. Now, why we look for the capability of the team? Reason because when particular, we take for the assignment, if we go for a particular assignment, we need to make sure that, okay, each team member can comply to the ethical requirement. There should not be any restriction, or there should not be any condition which may stop a team member to comply with the ethical requirement. Okay, so let's say, for example, I'll give you a hypothetical example. What if a person, okay, like when I talk about an ethical requirement, it talks about integrity, objectivity, confidentiality, professional behavior. What if the person cannot maintain the confidentiality or objectivity, integrity? Okay, what if the person is interested? Let's say, for example, one of my team member is a relative, okay, of the director. So in that case, I need to ensure that, okay, each and every team member can comply with the ethical requirements. Let's say threats to independence, all these can be there. Then your question is, in SA 260, what are the difference between management and those charged with governance? See, SA 260 talks about communication with those charged with governance. Now, when I talk about those charged with governance, there's a whole lot of difference between management and governance. Reason because when I talk about those charged with governance, they are person, or you can say trustee sort of things, which have a responsibility for overseeing the strategic decision making. So their role is to look after the strategic decision making which is done by the management. Simple, in a simplified term, board of directors can be management, or CFO, CEO, CXOs, or whatever can be the management. On the other hand side, audit committee can be those charged with governance. Okay, then your question is in SA 240, in fraud risk factor, what is rationalization? See, there is a fraud triangle. Okay, there are three factors in fraud triangle. There should be an opportunity, there should be an incentive to perform the fraud, and third is the rationalization. Now, what are these things? So if you see the fraud triangle, what it says that basically, okay, fraud triangle talks about if these factors are present, then only there are high chances of fraud. And when I talk about rationalization, means rationalization of a particular activity. Let's say, for example, a person stealing from the cash register. Okay. Now, rationalization is very important. Means how he thinks that stealing from cash register is perfectly fine. That is rationalizing the act that he's performing of stealing from the cash register. So if he's performing the fraud, a kind of a fraud, basically taking out the cash from the cash register without informing anyone, then how he rationalizes in his back of the mind, it may be like, okay, the company is not paying me that much amount, that's why I'm taking out from the cash register. That's how he might be rationalizing the thing. But again, rationalizing means how he's validating in his own thoughts the act he's performing of fraud is good. Then your next question is with respect to the SA 300. Audit strategy comes before the audit plan. Okay. See, audit plan is more detailed one compared to the overall audit strategy. When we talk about audit strategy, it's an overall audit strategy. Okay. Overall audit strategy means it's a high level thing, which will be considering, okay, what we need to do, how we need to do. But when I talk about audit plan, it will include each and every testing, how much evidence I'm expecting from this particular testing, how much comfort I'm expecting from this particular testing, okay, in much more detailed way. That's why first you decide the strategy, how you need to go. Okay, I need to complete the audit in 3 months. I need to test these 10 areas. I have 10 people with me. Strategy, I'll form a strategy. Then I'll go into the deep, I'll prepare a plan. Okay, what things I need to test in these 10 areas? Day-wise plan. When is the closure? How much comfort I will be getting? How much controls I need to test? Everything. Audit plan and audit planning stage, both are different. It's a stage where audit planning stage is a stage where you perform multiple activities like creating a strategy and developing a detailed audit plan. So that's a stage and that's an activity you are comparing both. So that's both are different. Any further questions? Any further questions? I hope I have replied to your old questions. Like, if any further questions, I'm okay. There is one more. Okay, very good question. So the question is, in SA 299, there is a concept of common audit report. What will be the audit opinion? Will it be based on majority? If not, then what? See, I think I took a question also on this particular one. Okay. Majority, if a common audit report is there, okay, let's say for example, there are 3 auditors. If all the 3 auditors are not agreeing with each other, they all will issue a separate audit report. When 2 or 1 or more auditor agree with the opinion, for their audit report, or for them, it will be the common audit report. When I talk about a common audit report, means, okay, for example, auditor A, auditor B, auditor C, A and B agree with each other. Now, instead of A prepare separate report, B prepare separate report, A and B both, what they will do is they'll prepare a common audit report and C will prepare a separate report. It's not about the majority, it's about the consensus. How many auditors have consensus, or they agree to each other. So those auditors who agree to each other will prepare a common audit report, and the rest will prepare a separate audit report. There is one more question. Audit evidence, is it reliable in soft copy or hard copy? Again, if you can authenticate, even it's a hard copy or soft copy, if you can authenticate the audit trail, if you can authenticate, okay, there is no tampering with the audit evidence, or if you can authenticate the completeness and accuracy and reliability of that audit evidence, doesn't matter it is in the hard copy or soft copy. For me, soft copy, I sometimes prefer soft copy more than the hard copy. Reason, because in hard copy it becomes sometimes difficult to check for the audit trail. Let's say for example, journal entries. If you have a manual paper-based journal entry, or if you have a journal entry into the ERP, in ERP I can check the audit trail. But in paper things, it's difficult to check the audit trail. When the paper was created, who signed it, when signed it. Let's say for example, I signed today a paper, but I put the date of 2 years back. Difficult to identify audit trail. Any other doubts? See, okay. QCR before each audit report. Okay. Quality control review is required for the listed entities and for the entities where it is necessary and considered necessary by the firm before issuing the opinion. See, what is the purpose of quality control review? Quality control review ensures that whatever work the team has performed, whatever evidence they have gathered, whatever details they have gathered, decision making, professional judgment, estimates, everything is appropriately fine with respect to the the conclusion. Let's say for example, if I have gathered 10 audit evidences, it's pointing towards the unmodified opinion, then that unmodified opinion and the evidence collected are correct, the correlation is correct, everything is correct. That's the purpose of quality control review. Now, why before audit report? Reason, because after audit report, if you perform quality control review, then there will be of less use. Means if even the quality control reviewer identifies any observation, audit report has been issued. There is no point of performing. That's why a quality control review is required to be performed before issue of audit report for the listed entity and for the entities where firm considers necessary. I hope I'm clear. Any further doubt, guys? You can refer to the company's audit lecture for the ICFCR. I have discussed over there particularly. Also, we'll check something during the standards also. In 315, we talked about the internal controls. 330, we talked about the internal controls. Again, we will be there touching up when I will touching up the audit report. If no further doubts, then I propose to conclude the session over here. And in next lecture, we will be covering the rest of the 500 series. Please go through in detail, revise it. And I will be taking up, majority of the practical side of the 500 series rather than the theoretical side. Okay. Thank you. Thank you, guys. Thank you for your time. Thank you for being here today. See you in the next lecture.